Capital Record, where we defend free enterprise and capital markets because we believe in the dignity of the human person. Hello and welcome to David Bahnsen's Capital Record, brought to you by National Review. Very grateful for those of you who listened to last week's episode about the hubbub with Nick Fuentes, Tucker Carlson, Kevin Roberts, heritage, the conservative movement, anti-Semitism, cancel culture, all of these things going on, the splintering on the right, and J.D. Vance, who everyone knows hates infighting and would never say anything bad about National Review, telling us to stop the infighting when it comes to neo-Nazis. Yes, I did a whole Capital Record on that issue because I think that there is some economic issues underneath this topic. And that Capital Record last week appears to be one of our most heavily trafficked episodes ever. If you missed it, please go listen. I think there's some very important takeaways in that Capital Record. This Capital Record episode almost just writes itself because we got a meme on social media distributed by the White House itself, by the personal social media accounts of President Trump, and retweeted by the director of the Federal Housing Finance Agency, Bill Pulte himself, with an image of Franklin Delano Roosevelt, that conservative stalwart that New Deal conservatives have been so proud of for almost 80 years, who had been in office when the 30-year mortgage came to be a thing, next to an image of President Donald J. Trump with the copy of a 50-year mortgage, and Bill Pulte saying this is game-changing stuff that they are working on, that the White House wants to do, to institute a 50-year mortgage. As I'm sitting here talking, I don't know if they mean that the government would subsidize it, if they would back it, if they would just mandate Fannie and Freddie offer it, but it would still be subject to normal market underwriting. That is what I assume it would be, but nevertheless, it'd be more of a regulatory permissive thing to introduce the existence of a 50-year mortgage as part of an affordability agenda, a policy portfolio that says we're going to make housing more affordable by allowing people to stretch their payments over 50 years. And there are a lot of problems with this, but I'm going to start with the free part of the free and virtuous society. And in this free market consideration, I will say that if a person wants to borrow money over 50-year amortization, and a lot of people are saying, no, they'll never really do it because they'll borrow for 8 years or 4 years, and then when they're in a better position, then they'll refinance to a lower term mortgage. All right, well, maybe that's what they'll do. But if they want to start off with a 50-year amortization and all the de minimis amount of principal reduction that goes into that for those first 3, 5, 8 years, and there's a lender who wants to do that for them, a bank who wants to extend it, I couldn't care less. It is none of my business for a lender and a borrower to come to a mutually agreeable situation at the amount of capital, the terms of underwriting, the rate, the payment, and that all includes the math of the maturity of the borrowing. So 30 years, 10 years, 15 years, 50 years. If two free actors want to do it, it's not my concern. But what I do want to question is whether or not anybody thinks this is actually good for affordability. People buy monthly payments unless they are wealthier people that are a part of a growing coalition of folks that are buying a house cash. They can be very different in their price consideration, which is going to focus on the sticker price of the home, where the sticker price of the home for someone financing the lion's share of it is much less important, and the amount of monthly payment is more important. And the argument goes that you're going to get a lower monthly payment with a 50-year amortization. But of course, what this also does is allow the sticker price to price in that reality. It also creates a massive amount of money being paid out to a bank that would be nothing more than interest over time. And you say, well, not if they refinance after a few years. Well, great. If they do that, they do that. But that would indicate to me that they're buying a home they can't afford, that they think they'll be able to afford later. And I don't really understand someone doing something that the only way they can do it is if they use some gimmickry and kind of unwise mechanics to do it now, so that then they can then kind of reassess it and reprogram the transaction in a number of years when they're in a better position to do it. That sounds to me like something that maybe should be delayed being done at all. But I digress. The other component to this is how much money it causes a consumer or borrower to pay to a bank versus actually equity, building of equity in their home. Now you say, look, there's just some people who can't afford the monthly payment. Let's do everything we can to help make things more affordable. I would also argue that the low-hanging fruit of affordability when it comes to the finance part of the transaction is the down payment. And this does nothing for that. And if it does, if they go, not only are we allowing a 50-year mortgage, we're allowing it with much less down payment. We're going to make Fannie and Freddie allow it for people without that normal equity, protective equity we want in the transaction. Now you're just really tempting history to come and smack you across the face. I don't imagine they're going to do that, but whether it was a 10-year, 30-year, 50-year mortgage, I couldn't care less. Trying to go do a transaction you can't really afford to do without the appropriate amount of equity is insane and leads to very bad things for the borrower, for the lender, and for the macro economy. If you don't believe me, Google 2008 and go from there. But in the meantime, what I want to say is that a 50-year mortgage is likely being done because someone's stretching to do a transaction they shouldn't do. It is failing to address the real heart of the matter, which is supply, that if you want an equilibrium between supply and demand to relax the unaffordability issue that we face, that this is going to stimulate demand with a 50-year mortgage, but it is not going to increase supply. This is a sort of tweak of what Kamala Harris wanted to do by giving people down payment to help them get into a home. That adds to demand. It gets priced into the sticker price of the home anyways, and it doesn't address the supply issue, which is the heart of the matter. This is just a very, very, very bad idea as policy solutions go. But you go, you know, David, that's fine. You don't like it, but at least they're trying something. These guys, Bill Pulte, they're serious about affordability. And they're so serious that here's something Bill Pulte said over the weekend. And I'm reading it verbatim so no one thinks I'm making this up, because part of me feels like I'm making it up. We have found, you ready? We have some of the biggest technology and public companies offering equity to Fannie and Freddie in exchange for Fannie and Freddie partnering with them in our business, Pulte said. We are looking at taking equity stakes in companies that are willing to give it to us because of how much power Fannie and Freddie have over the whole ecosystem. All right, we have two companies, Fannie Mae and Freddie Mac, that the United States taxpayers own 79.5% of the equity of. They were being operated right now after 17 plus years in conservatorship. He is the self-appointed chairman of their boards, and he is stating that one of the things they want to do, because they're so serious about housing, is go day trade tech companies. Go take on equity stakes in AI bubble. Their charter by Congress, which has never been repealed, is to provide stability, a secondary market for residential mortgages. Their charter is to provide assistance for the secondary market of residential mortgages, to help low and moderate income families be able to get into homes by being a liquidity provider to the banking system in its facilitation of a secondary market for mortgages. To do so in an orderly manner. There is absolutely nothing in the charter of Fannie and Freddie. It talks about becoming an equity stakeholder in tech companies. There is nothing in being an equity stakeholder in tech companies, in the government picking winners and losers in the economy that provides more housing affordability. This is utterly insane that he said it. I will say, President Trump did not echo this one. It's very possible Pulte's rogue, or he's just sort of piping off at a conference. He was at the, what was the name of the conference they were at? The annual housing conference hosted by Resi Club. I don't know if this is coming from the Trump administration. Well, we know it's coming from the Trump administration. Bill Pulte is a senior member of the Trump administration and the director of one of the top finance agencies in the country. But whether or not President Trump's personally signed off on this or not, I don't know. He is touting the 50-year mortgage. And what I bring all this up to say that there does not seem to be a real sense of seriousness about housing affordability. Now, I've done prior podcasts making the point before, there's not a lot the administration can do here. What we need is to tremendously push, aggressively push, substantially promote ease of state and local impediments to the building of new housing supply. Trying to stimulate demand and create financial engineering that manipulates people's ability to effect a transaction where they ought not be doing one is not the need of the hour. For those of us that take housing affordability seriously, and I happen to believe it to be one of the most important economic and cultural issues of our day, that the new median first-time home buyer is 40 years old is remarkable to me. It was 29. The median was 29 in 1981. That we have seen this go to 30, 32, 36, 38, 39, now 40 years old is not good. And there are so many reasons it need not be this way. But housing affordability comes from housing prices finding equilibrium between supply and demand. And stimulating demand without promoting more supply makes it worse, not better. What we need is a supply side solution. And there was a time when people on the right knew that. Thank you for listening to David Bahnsen's Capital Record.